We're excited to have Anthony Tan, founder of Grab, which is the most valuable startup in Southeast Asia. First up, Anthony, congratulations on the SPAC.
Thank you so much, and thank you for letting me be here.
I want to go back to the very beginning. Back in 2012, you were looking to solve a messy taxi problem in Malaysia. Safety was an issue, drivers weren't making money, and you saw an opportunity.
You're totally right. There were some really big local problems, and that local problem was just a humble ask to say, hey, I want to be able to commute safely to work. So my co-founder, Haslinda Ling. Ling used to work for a consulting firm that made her work late at night. And when she took a taxi at home, back home, she had to literally pretend to talk to her mom so that the driver would know somebody else is on the other line. And we said, look, this has to be solved. We have to create a much safer mobility solution where anyone feels safe to commute. But then by doing that, as we signed up more and more driver partners, in fact, I personally signed up many of them, we also realized, wow, they didn't have bank accounts. We had to help them set up bank accounts. We had to help them obtain financing to get their first smartphone. They never even had a smartphone. And it was this early insight that gave us an understanding, wow, they have been quite excluded from the financial services that you and I have been very blessed with. So we said, how many of these people are underserved from the existing financial institutions out there? So as we signed up more and more driver partners across, we said, hey, this is a natural adjacency so that we can help small businesses, we can help them be included in the financial system. So again, just focus on solving big local problems.
So you've ventured into financial services, including digital payments. You now are part of a consortium with a digital bank license. How much has the pandemic advanced digital payments, you think? I mean, we talk about an acceleration. Give us a sense of what has been achieved.
Sure. Just to give you a sense, according to Euromonitor, in 2020, we were the #1 app by GMV for online food deliveries, ride-hailing, and digital wallet payments across the region. And we're just doubling down on that. For us, we can see that being the category leader is obviously something that is important to us, because being the food delivery category leader, by knowing the data of how well a food merchant does, this was something that a lot of traditional financial institutions couldn't offer. Micro loans to help them grow their business, but we could, where we said, hey, we understand how much you've made. We understand that it's come down or gone up because of COVID. And we said, because of the data, we could see, and we were comfortable with the risks because we understood the cash flows. We said, we're willing to lend you. And because of that, I'll give you an example where a merchant called Khao Gang, which is a Thai restaurant in Bangkok, which was very affected by the movement control measures. When they reopened, they didn't even have capital to buy ingredients. But because we understood them as a Grab food merchant partner, we had access to their data. We understood their daily sales. We could determine how much credit and even help that owner, him, calculate daily repayment amounts automatically so he could pay the loan on time and help grow that business.
The thing is, technology is a double-edged sword, right? We talk about how it can help financial inclusion, but it can also deepen inequality. How are you looking at that issue?
In fact, I like to point out that it's actually helped a lot of businesses that couldn't afford this type of help or couldn't access this type of help. If you look at merchants, for example, as I shared before, they couldn't access this, but couldn't access working capitals, but now they can. That's just one example. Another example is farmers. Say farmers in Vietnam, for example, recently, because of the movement control restrictions, a lot of lychees, just as a category, was about to completely expire, was gonna get spoiled. And we created one we call the Summer Signature Fruit Campaign in Vietnam. And we helped farmers sell over 100 tons of fresh lychee in 5 days because our tech platform could connect multiple parties, enable lower cost of distribution to help farmers grow, help them ensure that their produce doesn't get spoiled, help government was very happy with us. Our businesses, so many of the Gong Chas of the world, the bubble tea that you would buy, were buying lychees for their bubble tea from us. Consumers were happier, merchants were happier, we were happier. So there is a way where technology can actually help reduce distribution costs, create access, and everyone wins together.
Because there's so much potential, it's not surprising that we have seen an invasion of new fintech players, but we also know that the banks are fighting back. They now have a digital strategy of their own. How do we look at this? How will this play out? How do fintechs and traditional banks coexist?
Well, I don't see it as one or the other. In fact, Southeast Asia is still highly underbanked, highly underserved. Many people are not in the financial system. Many don't even have a credit profile, unlike in highly developed markets like the US. And non-traditional platforms like Grab can really fulfill this need well, where we have the blessings of providing high frequency, daily essential services, whether it's mobility, whether it's food delivery, grocery delivery. And because of that, we have access to unique data. At the same time, we also have the largest driver network across the region. And this helps give us unparalleled access across 400 cities. As we gather more and more from these nodes all across 400 cities, we have data points like how much flexible workers or small businesses earn, how often they work, how regular or irregular. That gives us that sense of credit worthiness. That makes a big difference. Now, we partnered banks to help them. Sometimes we provide the lending just by Grab. A lot of times we partnered banks to provide these working capital loans. And again, being the category leader in food helps us give this information into our AI machinery to build insights. And these insights are then, we partnered banks on how we could provide these merchants with loans. They are obviously attracted to us because what you might ask, why are banks attracted to us? They are attracted to us because there's a lot of distribution, there's a lot of access that they usually wouldn't have. They have insights that they couldn't access before that we can provide. And while they are experts on specific financial products, example, we partnered UOB and Maybank for card solutions depending on countries, or Citibank for loans. We partnered with MUFG, which has one of their subsidiaries, Krung Sri in Thailand, to offer our driver and merchant partners loans. So we will continue to partner and find ways to build the ecosystem together.
Right. I'm just wondering, are there policies that can help? Because we're still a long way away from realizing the full potential of tech for financial inclusion.
Yeah, you're right. I think regulation is very important. How do we continue to, number one, leverage on our partnerships with the governments to provide clearer regulation so that fintech firms can innovate within these clear regulatory boundaries and protect consumers at the same time. That's very, very important. Number two is, I would say, financial literacy. Making sure that consumers in the region understand what they're signing up for. I'll give you an example. In Southeast Asia, it's one of the lowest financial literacy in the world. Only 30% of adults in most Southeast Asian countries are financially literate. This means majority of people in the region don't understand the myriad of financial products or can't make the best financial decisions whether it's on savings, whether it's on insurance, whether it's on investment needs. So we are committed to driving this financial inclusion by providing very clear, very transparent, how do we educate our driver partners better, for example.
Governments growing increasingly uncomfortable with a growing reach of big tech. I mean, they're talking about regulation. Are you concerned about that? I mean, how much regulation is too much regulation? Would regulation necessarily impinge on innovation?
I think there's a lot of discussion around big tech and regulation in the US now, but in Southeast Asia, it's so different. The US has a very mature tech ecosystem with very large tech players. S&P 500 have many of them. Southeast Asia, on the other hand, is still at the very beginning of this road. If you look at the 2019 study by Google, Temasek, and Bain, it shares that in Southeast Asia, the digital economy will continue to grow from 100 billion to 300 billion by 2025. So there's still a lot of room for different players, whether it's a small startup or established players or industry incumbents. And we just need to keep innovating for Southeast Asian consumers. What is most important is that we have this open and continuous dialogue with regulators to make sure we do what's best for consumers.
Anthony, we can't talk about future payments without talking about digital currencies, cryptocurrencies. How do you see cryptos, digital currencies fitting into the future of digital payments? Do you see them as perhaps a fintech solution to faster, cheaper, more inclusive form of payment?
I know digital currencies is a hot topic right now. From what I've observed, there's so many examples of it, the likes of crypto, and I know it's been very popular, and especially with even private and institutional investors since 2020 and growing. But a starting point is how do we gain mass adoption for these, and whether these new technologies can be trusted. Trust is a very important word here by both consumers and regulators. And crypto was seen as a challenger to the status quo. But we haven't seen it replace day-to-day transactions yet because of the regular fluctuations that's taking place. And that undermines it as a reliable source or store of value. So with all that said, blockchain, the underlying tech, that's here to stay. And we believe that it creates transparency so that when people transact, as everyone is on a network and there's a ledger or transactions, it builds trust. So this is where the real innovation, this is where the real value could lie. So we will continue to watch these developments regularly. And I think our goal is with the region's regulators, encourage clear education and clear transparency so that will help on mass adoption.
I'd like you to do some crystal ball gazing for us at this stage. I mean, what are you most excited about when you think about the potential of technology? What innovations do you think are coming?
I think beyond payments, we're looking at a breadth of financial services that could reach millions. And as you know, in Southeast Asia, 600 million. So millions for the very first time. Today, legacy financial services are still quite inflexible, not very transparent. So the people who have access are more sophisticated, are middle or upper class, but it really doesn't have to be that way. In the future, hopefully in the near future, financial products are transparent, are affordable, easy to read. Even a 5-year-old could understand. My 5-year-old son could read it and understand. And how consumers and small businesses will have access to this, I believe, is the future of digibanks. And that's why we are betting on this future. We see the banks of the future being totally branchless. Imagine no more branches, no more ATMs, totally ATM-less. Fintech platforms that wants to connect with these banks will not be restricted by the lack of infrastructure anymore. Whether you're in a tier 4 city or on the 17,000th island in Indonesia. And you as a consumer, as long as you have basic internet, anyone could have access to a financial service you need while sitting at home in your couch, whether it's savings, whether it's invest, whether it's insurance, whether it's taking a loan to grow your small business. It should be as easy as today how you use Grab food to buy lunch or you use Grab to go to the Bloomberg office. So I believe that's key to making it accessible and open to all.
What concerns you the most about technology? Would that be cybersecurity?
What concerns us about technology today? Today?
Mm-hmm.
And
the future.
Okay. Well, the issue isn't technology. It's about how we roll it out and how it's meaningful to our consumers. I think many companies are helping small businesses, and we welcome that. As many of them, many small businesses absolutely need to come online. So our job is to make sure how do they onboard, register, and get on board and start selling ASAP. But you can't just expect magic to happen. We need to provide them the tools. We need to provide them training. We need to help them with the self-service ads to grow their sales and help them understand what are the responsibilities of taking responsible lending to short-term loans to grow their business. So this is how we're going to help them grow online and digitize their business, especially small businesses, whether it's a warung in Indonesia or hawker in Singapore. Now, in the lending space, what I'm worried about is there are bad actors that freely have been making loans without the right checks and balances. And this generally leads to very bad outcomes. I mean, Bloomberg had an article, if you remember, about Cambodia and how it's really pushing the country into a bad place with 8 billion in loans. We need to ensure lending is responsible. We need to ensure when we lend to someone, that person is likely to pay back based on highly robust credit scoring. We need to prioritize to make sure we help finance people who are looking to purchase productive tools. So for example, in our case, whether it's providing a fuel lending, so a fuel card lending, so that they can continue to drive and deliver more food and groceries and help people with mobility needs. Whether it's better smartphones, so the GPS, we provide smartphone financing to ensure that the workhorse device has a better GPS kit set so they can deliver services better. And this creates a multiplying effects in the economy.